Good morning, everyone. It is September 16th, Friday morning. It is 8:50, and I'm just going to run through the morning charts real quick. Here we've got the US dollar index. It's the 60-minute chart, and this is zooming back several months, a couple months here. And what we've been pointing out here is that we've had a nice strong run to the upside. We've broken a couple key pivot highs, and the fact that we had a nice strong move up shows that it's most likely an impulse leg, meaning we've probably got a trend reversal. The old trend for the dollar was down, and we clearly broke through this level and continued to rally. Since then, we started to go into this tight little bull flag, which I pointed out was bullish action, and we're just waiting for it to pull back far enough to where we think we see price action actually showing that we've seen a bottom in this pullback, and then we'll probably see some type of rally. And what we saw yesterday, I pointed out that if we just zoom in here, I can show you a little bit in a minute, but what we saw here was the higher high, or the highs here started to become lower, and then we saw a breakdown yesterday, and that's a sign usually that the market is washing everybody out of the dollar. They're thinking it's rolling over and they want to get out, and it causes this sharp collapse, and that's exactly what we wanted. We came right into this previous pivot high here. The chart looked like it was spooking everyone out of the position, and usually when everybody is scared and bailing, that's when you want to look to start to get into a position. And we ended up going long yesterday right down in here, and futures showing the dollar index is starting to rise. We're going to get a nice gap higher in our favor this morning, and with any luck we might see the US dollar chop around and form a little bit of a base here, but eventually it looks as though it's ready to work its way quite a bit higher and start possibly another run that's even equivalent to this last run, because usually a bull flag is the halfway mark in a thrust, and within a bull flag you can have smaller bull flags, which you can see right here. Let's pull up a different color. We had a nice impulse leg up, broke a key pivot level, broke another one back here, and then we had a nice little pullback, and then from there it continued back up. So if you take this measured move from there to there, it's pretty equivalent to there to there. So we could have a potential huge move in the US dollar equivalent to this big move here. And of course, if that happens, we're going to see equities have another big leg lower, and I think we will start a bear market if this takes place in the coming days or weeks here. So yesterday the U.S. dollar fell, and we saw equities continue to move up with the weak dollar, and it pushed the equities market right up into key resistance and into an overbought situation where everybody was piling into stocks yesterday right at under a resistance level, and that's usually a sign that the market is likely going to top out and roll over. Now I'll show you the equities chart last, but here we'll start with crude oil. Crude oil, this is the 4-hour chart. We're zooming back 4 months, and again here we've got a very bearish chart. We're coming down here. The overall trend is down. We've been forming this rising wedge. I like rising wedges because when you do get a breakdown, it usually is very violent, and we've got potential to hit the $76 a barrel on the crude oil. Now, I do figure if we do get a drop, we'll probably see it come down to about 82 and probably find a pretty good bounce in there, which it could bounce back up to this breakdown zone. And then from there, we could see it actually work its way lower with multiple waves down. So we'll see how that plays out. But overall, this is a pretty bearish action and very similar to what we saw back in here. You get this rising wedge, and you just see a big precipitous fall here where it just goes into free fall mode, and so there is potential for us to see a huge move actually to the downside, but I'm looking at a conservative number, and we'll be looking to take partial gains around 82, move our stops to break even, which we shorted right up here the other day, and then of course we'll manage our position as it goes in our favor. Looking at the gold and silver, I've been pointing out gold and silver, I'm neutral to bearish. The reason I say I'm neutral is because I don't really want to short something in a bull market right now. They look toppy. I've pointed out the reasons why it looks toppy over the last few articles that I've done, reports, and in my morning videos. But the fact that we had this high and a sharp pullback on high volume, made a new high with a very sharp drop, breaking a previous low here. And then we made a run to a new high, and it got stepped on again. This is usually 3 surges to new highs followed by strong selling usually is a sign that we're going into a intermediate top. And what that means is we're probably going to see eventually a pullback either down to this range or right down around the 640 range, and it could stay within there for some time and kind of work its way around and eventually work its way to a new high in several months. Now silver usually performs it's a little more sporadic, but overall silver has already kind of done what I'm pointing out in gold. It's already set its high and its low in my opinion, and now it's just putting its time in, chopping around, really messy chart. It's trading in the middle of its range, so you don't really have any good direction of what it's doing, but I think it's just going to trade sideways for some time in this giant range, and then eventually when gold finally builds a base and firms up throughout a few months, we'll probably see both gold and silver run to new highs again, but I think they've made the majority of their move for some time. Looking at the SP 500, this is the 60-minute chart zoomed out about a month and a half, and overall what we can see here, I just want to point out the trend is down. We've been forming this, I'm just going to change the color here, make them, trend is down. We've got more or less this kind of giant bear flag. It's been playing out, it's trying to form a base, just been chopping around up and down, up and down. Volume is it's been pretty steady through here, so there's a good chance it could continue to move higher, but overall, looking at the market internals and sentiment, we're reaching up into an overbought situation where we have previous highs, previous congestion area, previous high, and really there isn't big volume behind these moves to the upside, and I'm anticipating we might see a push a little bit higher, so but I do have a feeling we're going to see the equities market come down, and that falls in line with the US dollar putting a bottom in here and starting to move up. So as the US dollar moves higher, we're going to see equities get pulled back down, and if we do see that huge move up in the dollar index, then we're going to actually see the equities market break down and head sharply lower, probably another 5 to 8%, and it could be another huge opportunity. So I'll be looking to possibly take a short position, maybe today or early next week. We'll see how the market pans out here, but I feel as though we're right at this point here where we're going to see it roll over and go to the downside. And this chart here is similar to the crude oil chart. We've had the big sell-off, and we're kind of, crude oil is rising up into this wedge. The SP500 is a little more flat, not so much of a wedge, but it's still a bearish pattern, and the market's overbought, looking ready to pull back also. Anyways, that's it for this morning. I'll just show you the futures chart here of the SP500 so you can see what's happened. Yesterday, again, this is the futures chart. It's a 24-hour clock. So this heavy volume session, this is the regular trading hours that the majority of people trade, 9:30 to 4 p.m. That's when the masses are all making the markets move. And then you've got pre-market and post-market. So last night we saw the market close up here. We saw it chop around, push to a new high, pull back, and then it kind of went into a little free fall mode here, back into a support zone. And it started to build a little bit of a base here, and just this morning we're starting to see it ramp up a bit, and I would really like to see it move up to the previous high we saw some time ago. Let me just change the time frames here. I'll go to the 60-minute and just zoom back a bit. You can see if we could get a nice push right up into this previous high back in here, maybe even pierce it. If we get a nice push up today, I have a feeling we're going to see it get stepped on and come right back down. Now if you look at this chart, we're going into this really steep rising wedge right up into a resistance, and the market's overbought. And if we get a breakdown here, it's going to be very similar to the crude oil setup. You get this rising wedge, and once they start to break, you've got all these support levels where everybody's got their stops placed depending where they got in. And what happens is once it starts to break down, it triggers the stops and causes a waterfall effect, triggering stop after stop after stop, and it'll go straight back down and come back down into these lows. So that's where I'm looking for an opportunity, hopefully today, up at this resistance zone. Anyways, that's it for now, and I'll talk to you guys in a bit. Bye bye.